Stop. Whatever you were about to click on, don't. Because in the last 36 hours, something happened that almost nobody on financial TV is connecting the dots on. And if you own silver, if you're stacking silver, or if you've been waiting on the sidelines for the right moment, this is the message you needed to hear yesterday. Silver just exploded more than 6% in a single session. It ripped through $77 an ounce. And it didn't happen because of a Fed announcement. It didn't happen because of a CPI print. It happened because of one phone call, one piece of paper sent through Pakistan to Tehran, and a White House that quietly admitted the higher for longer inflation trap was just blown wide open. I'm going to show you exactly what happened, why silver moved the way it did, and the three-step move that's now setting up between now and the end of summer. Stay with me, because I'm saving the most important part for the end. And if you skip out early, you're going to miss the one number that tells you whether $77 was a top or a launching pad to triple digits. Let me set the table for you, because this story has been building for months, and most retail investors completely miss the setup. For the last several weeks, every precious metals investor in America was stuck in the same trap. Silver was getting hammered. Gold was capped. Why? Because of war. The Iran conflict pushed oil prices through the roof. Crude was running hot. Energy was running hot. And when energy runs hot, you know what runs hot right behind it? Headline inflation. And when inflation runs hot, what does the Federal Reserve do? They sit on their hands. No rate cuts. No relief. No easing. The exact words coming out of Fed officials, including Chicago Fed President Austin Goolsbee, was that inflation had not continued cooling toward the 2% target and had actually accelerated since the war broke out. That was the trap. That was the cage that was holding silver back. The Fed was forced to keep rates pinned at 3.50% to 3.75%. They held at the April 29th meeting. The dot plot was getting more hawkish, not more dovish. Some governors were even floating the idea that the next move might not be a cut. It might be a hike. Bank of America's economists were forecasting core CPI to peak around 3.2% in the second quarter. The market was pricing in a no-cut scenario all the way out to December. And here's what most people don't understand. Silver doesn't just respond to inflation. Silver responds to real interest rates. When the Fed is forced to keep rates high to fight oil-driven inflation, the opportunity cost of holding silver goes up. That's why silver kept getting smacked down even though every fundamental industrial demand, supply deficit, monetary debasement was screaming by. The Silver Institute pegged this year's supply deficit at 46.3 million ounces. That's the sixth consecutive year of deficit. Solar panel demand, EV demand, 5G, semiconductors, the industrial pull is relentless. Physical buyers in China and India have been treating every dip as an accumulation event. And yet the price was being held hostage by one variable, the war premium on oil. So that was the trap. Strong fundamentals, crushed price, and a Federal Reserve that couldn't cut. Until Tuesday afternoon. Here's what changed, and I want you to write this down, because the timeline matters. According to reporting from Axios and confirmed across multiple major outlets, the United States, through Pakistani mediators, sent a one-page memorandum of understanding to Tehran. One page. That's it. The objective? Formally end the conflict and begin the gradual reopening of the Strait of Hormuz. The terms reportedly include Iran accepting enhanced UN inspections, halting nuclear enrichment for 12 to 15 years, potentially transferring highly enriched uranium out of the country, and limiting underground facilities. In return, the United States would gradually lift sanctions and unfreeze tens of billions in frozen Iranian assets. President Trump publicly cited great progress in the negotiations and announced a temporary pause in escort operations through the Strait of Hormuz. Iran's foreign minister signaled openness to a comprehensive agreement. The White House said this is the closest the two sides have been since the war began. Now, what did the markets do? Watch this carefully. This is the inflation trap detonating in real time. Number one, oil prices collapsed. Brent crude fell for a third straight session. The war premium that had been baked into every barrel for months? Gone. Vaporized. Number two, the dollar weakened sharply. The US dollar index dropped. The euro pushed back toward 118. Why? Because if the Fed doesn't have to fight oil-driven inflation anymore, then the case for higher for longer rates collapses, and the dollar's yield advantage shrinks. Number three, Treasury yields dropped. Rate cut expectations got pulled forward. The market that was pricing no cuts in 2026 suddenly started repricing for 2 cuts. The federal funds rate path got dragged lower across the entire curve. And number four, and this is the one you came here for, silver detonated. Silver jumped over 6% to above $77 an ounce on Wednesday. Silver closed up $4.24. That's a 5.79% single session move. The next morning, silver pushed even higher, tagging above $80 an ounce. The gold to silver ratio compressed to around 60.6. That's a major signal that silver is outperforming gold, which is exactly what you want to see in the early innings of a precious metals bull move. Now stop and think about this. In about 48 hours, silver went from being trapped under inflation fears to being launched by exactly the opposite narrative. That's not a coincidence. That's a regime change. Now here's where I'm going to go deeper than the surface level coverage you're seeing on most channels. Because there's a critical insight buried in this move that almost nobody is talking about. This is what I call the asymmetric setup, and it's one of the most powerful structures I've seen in the silver market in over a decade. Here's what most retail investors think. If the war ends, silver should go down. War good for safe havens. Peace bad for safe havens. That's wrong. Dead wrong. And it's the trap that's going to leave a lot of money on the table for people who don't understand the mechanics. Listen to this. When the war was hot, silver had one tailwind, safe haven demand, but it had one massive headwind. Fed rates pinned high because of oil-driven inflation. Net result, silver got crushed. Now the war is cooling. Yes, silver loses a small amount of safe haven premium. But look at what it gains. The dollar drops, real yields drop, rate cut expectations come back online, and the entire monetary backdrop pivots from restrictive to accommodative. That is a much, much bigger tailwind than the safe haven bid ever was. In other words, silver was structurally positioned to benefit either way. War continues, inflation hedge bid. War ends, monetary easing bid. The only scenario that hurts silver is a rapid confirmed peace deal that simultaneously triggers a dollar surge and Fed rate hikes. And that's not on anyone's radar. The fundamentals on top of this are stunning. Bank of America's economists still expect core CPI to peak above 3% before settling lower. JP Morgan Asset Management expects 50 basis points of cuts this year and 75 next year. Goldman Sachs Research projects the terminal funds rate dropping to 3 to 3.25%. That's a full point of cuts coming. And while the macro is shifting, the physical market is on fire. First quarter physical demand hit a record $193 billion. 6 straight years of supply deficit. Industrial demand from solar, EVs, electronics, none of that goes away when peace breaks out. In fact, lower interest rates accelerate industrial expansion, which means more silver demand, not less. Silver's year-over-year gain is now over 147%. Just 1 year ago, silver was trading in the low 30s. Now it's pushing 80. That is a generational repricing event happening in real time, and the Iran deal just removed the last governor that was holding it back. Okay, so here's the playbook. This is what I'm watching over the next 4 to 8 weeks, and I want you to be watching the same things. Because if you understand the signals, you'll never be on the wrong side of this trade. Signal number 1, the dollar index. If we see the dollar break below recent support and it's already cracked, that's confirmation that the rate cut narrative is taking hold. Lower dollar means higher silver. Period. End of story. Signal number 2, the gold to silver ratio. We just saw it compress to around 60. Historically, in the most explosive silver bull markets, that ratio drops into the 40s and 30s. Every point of compression on that ratio is a catapult for silver prices. Signal number 3, the next Fed meeting? The Fed has been telling us they're data dependent. Well, the data just changed. Oil down. Inflation pressure down. Labor market softening. If they don't cut at the next meeting, the meeting after that is almost a lock. And here's the kicker. Jerome Powell's term ends mid-May. A new Fed chair is about to be named. Most analysts believe the next chair will lean more dovish. That alone is a structural tailwind for silver. Signal number 4, Iran negotiation milestones. Watch for Tehran's official response. Watch for the actual reopening of the Strait of Hormuz. Each milestone weakens the dollar, lowers oil, and pumps silver higher. Now the price levels. $77 was the breakout. The next major technical level traders are watching is $80, which silver has already tagged. Above that, you have a clean run toward 85, and from there, the all-time inflation-adjusted highs come back into the conversation. We are in price discovery territory. There is no overhead resistance you can point to with conviction. None. Now I have to give you the honest disclaimer here. This is not financial advice. Markets can pull back. Profit-taking is real. After a 6% single-day move, a 2 or 3% retracement is healthy and normal. Don't chase. Don't FOMO. But understand the structure. Every dip in this environment is being bought. Physical demand is absorbing every shakeout. The setup is asymmetric to the upside. Now listen carefully, because this is where I need your help, and this is where you help yourself. If this video gave you even one insight you didn't have 10 minutes ago, even one, I'm asking you to do 3 quick things, and I'll tell you exactly why each one matters. Number 1, hit that subscribe button right now, not later. Now, because the silver story is moving fast. The Iran deal is going to have follow-up news every single week. The Fed has meetings coming up, the dollar is moving, and I'm covering every one of these turning points the moment they happen. If you're not subscribed, you're going to miss the next leg up. And trust me, you don't want to find out about a $90 silver print on Twitter 3 days late. Number 2, drop a comment below. I want to know what you think. Are you stacking right now? Are you waiting? Are you nervous? Are you bullish? Tell me where you think silver finishes the year. 85, 95, or triple digits? The comments on this channel are where the real conversation happens, and I read every single one. Your comment also tells the algorithm this video is worth pushing to other smart investors who need to see it. Number 3, and this is the big one. Stick around for my next video. I'm dropping a follow-up that breaks down the exact physical silver products I'm watching for accumulation in this exact price zone, the gold to silver ratio targets I'm using, and the hidden mining stock that just got revalued by this Iran news. That video drops within 48 hours. If you're subscribed with notifications on, you'll get it the second it goes live. One last thing before I let you go. I want you to remember something. The biggest moves in this market do not happen when everyone is comfortable. They happen exactly when the narrative flips overnight. When the trap detonates. When the people who were sure they were right wake up and realize the entire setup just inverted. That happened this week. The inflation trap got blown apart by a one-page memo. Silver ripped through 77. The dollar is cracking. The Fed is cornered. And the people who saw it coming are positioned. The people who didn't are going to be chasing. Don't be the one chasing. Subscribe. Come out, and I'll see you in the next one.